Hey guys, how's it going? It's Rohan here. So in this video, I will discuss the crypto market's current regulatory situations and upcoming developments that are coming in America, Europe, and the Asian market. And if we have not met before, in this channel, you will find me every day coming up with my analysis on crypto market and macroeconomic global issues. So do subscribe and let me help you keep yourself updated. So 2022 has been the year of crypto market's bloodbath. Over the course of this past year, the crypto industry has been experiencing a significant decline in value, with a number of high-profile cases including Terra Luna and crypto exchange FTX, as well as drop in the market value of more than 2 trillion since its peak in November 2021. In response to these, regulators have been put under greater pressure to closely monitor the industry as well as create robust regulations. Before there can be any progress on any of these issues, there are some key questions that must be answered. First, the industry is going to have to deal with a lot of gray areas surrounding user privacy and consumer protection as the current crypto bankruptcy cases move forward and new pending bankruptcies may take place in the near future. A key question that courts will continue to grapple with in the coming years is whether or not customers of crypto exchanges can expect their personal information will remain redacted when the exchange files for bankruptcy. This year, we saw questions arise with companies like Celsius and then FTX. So companies were initially allowed by the court to file the information about their creditors under seal. And filing under seal is a procedure allowing sensitive or confidential information to be filed with the court without becoming a matter of public record. Filing confidential documents under seal separated from the public records allow the litigants to navigate the judicial system without compromising their confidentiality. But in the case of Celsius, Celsius later released the list of its customers, and FTX is currently in the process of going through a similar hearing. Gary Gensler, chair of the SEC, has consistently asserted that the SEC has necessary powers to regulate crypto firms and that in his view, most of the digital currencies are securities. As such, he believes exchanges must comply with legal regulations that are applicable for brokers and dealers, and thereby the crypto exchanges would be considered securities trading platform. Now, coming to the situation of forthcoming regulations that are coming in the US, the Financial Stability Oversight Council, which consists of US financial agencies chiefs who work to ensure the stability of the financial system, could make use of its powers to decide crypto activities like stablecoins as systemically important, which would entitle the Federal Reserve or others some regulatory authority. And the SEC, of course, is expected to take actions in 2023, and other similar organizations such as Consumer Financial Protection Bureau, CFPB, may also exercise powers over crypto companies' financial products. And talking about Europe, the political and regulatory turmoil in the UK have caused a stir regarding Prime Minister Rishi Sunak's plans for the crypto hub when he was the finance minister. It is yet to be determined if the storm has passed, as many are calling for an early general election there, which could result in the Labour Party win. And the Labour Party is not as friendly to the cryptocurrency industry as the current ruling party of Rishi Sunak. Now, it is uncertain if the UK's desire to be the crypto hub has any significance when its financial regulator, that is the Financial Conduct Authority FCA, maintains a rigid outlook in regard to crypto. At a meeting with lawmaker CEO Nikhil Rathi, declared that 85% of the crypto businesses that sought authorization from the FCA to function in the country were refused. The Financial Services and Markets Bill, which is still being debated in the Parliament in UK, will give the FCA powers to regulate crypto-related companies and how they advertise to the UK customers. And the Treasury, the government's financial arm, will then outline the best way to control the sector. It will start with the public consultation. This process will demonstrate how open UK is to crypto. Now, talking about Asia, the regulatory frameworks in Asia have been solidifying. This year, Hong Kong implemented a licensing regime for exchanges, and South Korea established a bill to regulate digital assets. 2022 was also characterized by shifts in regulatory regime in some other countries in Asia. For example, Japan decided to ease tax regulations, making it feasible to issue tokens in there, while Singapore mulled over tightening regulations in order to protect the retail investors. Now note that rules that are very stringent in the area also creates a commercial opportunities in circumventing them. Investor, for example, in Japan, utilize off-the-shelf or OTC channels to stay away from paying hefty taxes to authorities. Additionally, China's investors continue to on-ramp. Approximately 8% of FTX users were based in China, as revealed during FTX's first bankruptcy hearing. Regulatory efforts in Asia have been accelerated by the fall of Luna and FTX. There are also soft consultations going on in Hong Kong concerning allowing retail investments, and Japan and Singapore are both exploring ways to regulate decentralized finance. Now, further this year, global exchanges have seized the opportunity to enter local Asian markets by purchasing smaller regulated local exchanges. For example, Binance's acquisition of Sakura in Japan and Toko Crypto in Indonesia. More mergers and acquisitions are forecasted for 2023 as larger entities look to acquire more regional players and thereby getting a hand in the Asian market. Now, coming back to the global markets, European Union made history in 2022 when they established the Markets in Crypto Assets Law, that is MICA or MiCA as you may call it, boasting their new consumer protection and financial stability rules. This legal framework is supposed to ensure that stablecoins have suitable reserves and that crypto exchanges are managed properly. So let's quickly have a look at the key points of MiCA as proposed by EU. So who will MiCA apply to? Broadly, the MiCA text provides for the regulation of many digital representations of value or rights that use DLT. With few exceptions, MiCA would apply to all CASPs operating in the EU. Stablecoin issuers would be subject to the liquidity requirements and would require a presence in the EU. In addition, stablecoins would be subject to direction and supervision from the European Banking Authority. The EBA would supervise stablecoins that have more than 10 million users or a reserve of assets that are worth more than 5 billion euro. In addition, the ECB has concerns on the legitimacy and the credibility of any stablecoin it could reject it. Non-fungible tokens that are individual and distinct would be excluded from the scope of MiCA unless the issuer creates a collection of assets for purchase. The entities behind NFT collections that fall under the scope of MiCA regulations would be obliged to provide a white paper that explains what exactly the product is and how it will operate on the blockchain. So 2023 is a pivotal moment for crypto organization, as the crypto companies must choose whether to adhere to the MiCA regulations requirement and obtain official recognitions in European Union. This would provide the crypto companies the ability to promote their services in the block and official approval that you are not FTX, and also connections with the traditional finance in that market for onboarding new clients. Exchanges and wallet providers can still offer crypto to EU customers without fulfilling regulatory requirements through a process known as reverse solicitation. Additionally, offshore providers may entice customers by offering additional features such as not reporting their holdings to EU tax authorities. Recently, the trend has been leaning towards stricter regulatory compliance. Binance, which previously claimed to have no headquarters, has now established offices in Cyprus, France, Spain, Italy as it prepares for MiCA approval, which probably will come into effect in 2024. All crypto businesses now are being careful that they are not losing some advantages by getting approval from MiCA. Now, coming to India, crypto assets are yet to be regulated in India, and the government has not registered any crypto exchanges. It also highlighted that due to the borderless nature of cryptocurrency, international collaboration is required for their management. The year 2023 will be a significant one for the Indian crypto industry, as three major events are supposed to take place. The first one is the annual budget. So the annual budget announcement has the potential to alter India's taxation of cryptocurrencies. Until now, a 30% tax on crypto profits as well as 1% TDS, that is tax deducted at source, imposed on all transactions, and this have had an extremely detrimental effect on the trading activities in crypto in India. The industry therefore consequently requested the government to reconsider and reevaluate these taxation rules. Second, in December 2022, India took on the presidency of the G20 group of nations and made it clear that establishing globally coordinated crypto regulations would be its priority. And talks between the G20 countries have already started, with the expectation that by September 2023, when India holds its presidential summit in New Delhi, an accepted crypto regulation framework will be emerging. And third issue that will affect India's situation in 2023 is the central bank RBI's effort in establishing CBDC. So to that end, RBI has begun trialing the CBDC in 4 cities in India. The result from these 4 cities and testing in these 4 cities will decide if India's digital rupee is viable and help shape a global standards for CBDC. And beyond all these regulatory situations affecting crypto assets in the world, I'm also going to take a quick look at the accounting guidance that will come from FASB in the coming years. In this article, it provides on that is possible guidance coming from FASB. So on December 14th, 2022, the FASB released a tentative decision requiring an entity that holds crypto assets to disclose the aggregate amount of crypto assets it holds separately from other assets, and present gains and losses on crypto assets in the entity's net income and separate from the income statement effects of its other intangible assets such as amortization or impairments. And number 3, classify crypto assets it received as non-cash consideration during the ordinary course of business and converted into cash as operating cash flows. Among other specific recommendations, the FASB board also decided that crypto tokens should be reported at fair value and that an entity should disclose both annually and at interim periods the units held and the corresponding cost basis. Although FASB is not a regulator, it sets the gap, that is generally accepted accounting principles, the accounting standard accepted by the SEC. So FASB is also considering whether to issue guidance on how to appropriately value the native tokens that cryptocurrency companies create themselves, which was a key issue in FTX demise. That pretty much wraps up this video. If you liked it, do smash the like button, and also don't forget to subscribe. See you in the next one.